I spent years going in circles trying to find something that would work for me, something that can help me find consistency in my own trading. And it wasn't until I started to focus on one idea, one strategy. And I want to go into that today with you, share my screen, share a trade I'm in right now and how I traded it in detail, and then share the whole idea of how I set up this trade so that way you can do it yourself. Let's get into it. So the first thing I want to get into is how I generally look at trades. I use support and resistance. That's the main thing I use. And if you look here, I keep it simple. Support is an area that's been tested multiple times, and resistance is an area that has been tested multiple times as well. So you can see this would be a resistance zone. We have previous support becomes resistance. Support right here, test multiple times. Now that's the key. I want to see a support level that's tested multiple times. If I can see that, then that becomes a significant area of interest for me. This is what I mean by support and resistance. I don't want to spend too much time on support and resistance because I've done that in many other videos, but I do want you to know that that is the premise of this strategy. Now, the strategy itself is going to be called a breakout, and I want to go into detail on today's breakout that happened on April 24th, 2023, and that is FRC, First Republic Bank. Now you're probably thinking, wow, like this is a crappy stock. It just tanked, and it did. And that is totally okay because that just sets up for the next move that I am playing. Now let me show you. If we zoom in on the 4 hour, you'll see that there's a level that's been tested multiple times. Look at all these touches here. Touch, touch, touch. And today is the breakout. You can see it's breaking out, and the next level of resistance is right here, the 1680s, which is a 17 level. So if you break at 15, you have $2 of upside to play with. Now this is something that's important for me to recognize. Now with that being said, we're going to go ahead and zoom in because I always want to zoom in once I find the big picture setup. So big picture setup is a daily breakout. This is held for multiple days, as I mentioned earlier. And now we're going to go ahead and zoom in. And when we zoom in here, you'll see during the pre-market, we were holding below the breakout area. But then once the market opened, we shot up and broke out. Now this is my signal that I need to pay attention. Now here's an area where a lot of traders fail. They see a stock breaking out and they just buy the breakout, which means they're going to have a poor risk reward. They don't know where to risk. They might risk just this breakout area, and if they do, they get stopped out right here. As you can see, once it breaks out, comes back under the breakout zone, they bought the breakout and they were told buy the breakout, risk the breakout, and now they get faked out and it runs without them. I don't want that to be you, so don't let it be. What you need to do is have patience. When something breaks out, you want to wait for a pullback. When you get the pullback, you then want to give it some time to tell you what it's going to do. If you want to buy on the pullback right away, you need to give it room. And I mean a lot of room, because if you just risk the pullback breakout zone, you can see here, you're going to be stopped out and be uncomfortable. But if you buy here and you give it the consolidation area, sure, you're risking wide. Yes, that's true. However, you would not get stopped out of fake randomness. And then if you stay patient and you wait after you bought some with a wide risk at the obvious level where you'd be wrong, you give it time, it consolidates, now it's holding. Now you can adjust your risk and risk the 15 area. And there you have it. Now you have a nice play. Now, this is something that I want to mention because too many traders just buy and risk the breakout. You don't want to do that. I've shared that in many other videos. I'm going to go ahead and share this trade with you as well. Here's the trade I did. I'm still in some. I have a stop at 1505. And the whole idea is it broke out, as you see here, pulled back, popped, held the breakout level. I got in here risking this prior low with the goal of selling some here and then riding the move. I did think it could go to the 17 area, so I am holding a small piece for that. That is part of trading. It may not work. It may work. I sold a lot on the way up. So now I'm in a comfortable position. And in fact, if you see here, there's another little bonus tip for you. For those who have been watching till here, we are now creating a trend. So here's another area of opportunity to buy. If it dips back down, I may buy some more, risking right here to ride it back up to the highs of 1640. This is trading. Trading is not black and white. This is the problem that a lot of people have when they watch YouTube videos or any course out there, is they see everything as black and white, and that is not trading. Trading is in the gray. We do have key areas, key support, key resistance, but it doesn't have to hold perfectly. And too many of us think it needs to, and that's why we get faked out. If I would have been in the impression that everything needs to be perfect, this pullback right here could have faked me out. And in fact, I'm guarantee you there's some traders out there who bought the breakout, risked the breakout, and got stopped out. I don't want you to be that trader. Right now in this market, breakouts are working. They've been working for me. You got to be patient for them. when they break out. If you're going to buy any of these breakouts near the breakout level, please risk the prior consolidation. If you don't risk the prior consolidation, you could get faked out right here. Don't let this be you. Instead, risk a prior consolidation until you give in the stock time to prove that it's going to hold, which this right here proves that it's going to hold because we popped back above it, held, and now we're holding. Then you can risk tighter. Risking too tight is also an issue that I find myself running into in the past, and that's something that a lot of traders fail to learn from. Again, you don't have to be so tight, so rigid. Play in the gray. Understand that these are areas, they're not perfect. And if the general idea is on your side, meaning the big picture, which is so important, that's why we went over that first. If you look at the big picture as a breakout, then the odds are in your favor. Now, just because the odds are in your favor does not mean that you're going to be successful. In fact, there are times where I buy the breakout and I lose. It happens. It's part of trading. And if you're curious about this software, this is TradingView. Great software. Check them out. Link in the description. It does help me out a bit, but they'll help you out as well and give you a great discount. Here's the thing. When you're trading, you need to be okay with losing. I want to hit that topic as well. Just because you have a strategy that works, just because you know from other people who've taught you the strategy that, hey, I have been successful for many years, so forth, doesn't mean that you will be successful. And here's why. A lot of us are not comfortable with losing. You need to understand that if you have a strategy that's 50% odds, it doesn't mean after 10 coin flips that you're going to get heads 50% of the time. Those odds play out on vast numbers. We're talking 200, 300 trades. So give yourself time. And how do you do that? As a new trader, you paper trade. And check out Cobra Trading. Cobra Trading is one of my sponsors. They're great. They have free demo accounts. You can go check them out. Link below as well. And they hook you up with a great discount. I'm sharing this with you because if you can trade demo for a while to get tons of trades under your belt and track them, you got to track them, then you can find something that works for you, including this breakout strategy. And if you're trading real money, please risk small. Risk $1 to make 3. I'm telling you, if you're laughing at that, you're probably the person who needs to do that. Risk $1 to make 3 because you have to get enough sample size behind you before you actually put big money behind your trade. Take your time. Do not rush this, because if you are that person who is sizing too big, trying to make big money now, then you're going to be that person that gets in this breakout right here at the breakout, and then you're going to risk tight and get stopped out right here and then be upset. And while it moves in your favor, you're going to be trying to buy up here because you're frustrated, thinking it's going to go without you. Take another loss right here. Then you're going to see another little trend. You're going to buy right here because you're chasing. Then take another loss right here. And it's going to be a very, very, very uncomfortable ride for you. I do not want that. Please listen to me. If you don't hear anything, please trade small. Give yourself enough room for error. Understand it's not perfect. Understand nothing in trading is perfect. There's a lot of gray. Good luck.